Hi friends, in the next 2 to 3 minutes, I am going to show you the power, the magic of dividends. Allow me 2 to 3 minutes of time. What you see on my screen is Coal India's price chart, and I'm going to take you back to 1st of January 2021. The stock was trading at around 105 rupees per share. So imagine you invested in Coal India on 1st of January 2021 at 105 rupees per share. I've picked up 1st of January 2021 as a very random date because I want to show you the power of dividend in the 4 years of time period. I need some time period to be able to work with. Now what happened since 1st of January 2021 is in front of you right now, and what you see here is the dividend history in the last 4 years or so. And if you total the dividend that the investors would have received after 1st of January 2021, so start counting from 15th of March 2021 onwards, and if you total this amount, it comes out to be around 96.6 rupees as total dividend in 4 years of time period. Now here is some maths that you need to see. On 1st of January 2025, which is after 4 years of your purchase, if you still hold the same one share of Coal India Limited, then your 105 rupees of purchase price, let's say you're still holding the share, plus the dividend, which is 96 rupees. If you add that total, your total value would be around 201 rupees per share, assuming that you have not sold that stock on 1st of January 2025. If you do some calculations, it comes out to be 17% CAGR just purely on the dividend. I haven't talked about the capital appreciation in the stock price itself. This is just purely dividend growth that you see in the last 4 years. Now, if I add the capital appreciation in Coal India's price, so on 1st of January 2025, the Coal India stock was trading at around 380 rupees per share. If I add that amount and now calculate the capital appreciation plus dividend gains in the 4 years time period, the growth comes out to be 40% CAGR. Now you may say that, Rahul, you've picked up one example here, you picked up some random date. No, I haven't done that. In fact, let me give you second example as well, which is Hindustan Zinc Limited. I'm going to stick with the same dates because to me, the dates doesn't matter. Yes, I do want some 3 to 4 years of period so that I can show you some dividend history, and this is all live data that I'm showing you. Have a look at my screen. Hindustan Zinc Limited 1st of January 2021 was trading at around 240 rupees per share. And if you were building your dividend portfolio at that time and you happen to pick up this particular stock at 240 rupees per share, have a look at my screen now in terms of the dividend history since 1st of January 2021. The total dividend, if you do the total of this, it comes out to be around 135 rupees per share. Now, if you again on 1st of January 2025, if I don't have any capital appreciation in the stock price, if I go very conservative that the stock is not going to appreciate in price, then also 240 rupees per share value now goes to 375 rupees per share if I add just dividends. In 4 years of time, just from a dividend perspective, that is 11% CAGR growth year on year, right? If you hold it for 4 years. Now, if I add back the capital appreciation, so on 1st of January 2025, the price was at around 445 rupees per share. If I add now dividend and the capital appreciation in the last 4 years, Hindustan Zinc Limited would have given 24% CAGR growth. My point is very simple. I can tell you third example, fourth example, fifth example. I can continue to go on. Using the same dates, you can do this analysis for yourself and you will find that dividend growth is phenomenal if you understand how to go about picking the dividend stocks. Now, dividends are never guaranteed, but there are companies who have very strong dividend policies and most likely they continue to give dividends. Again, I'm going to talk about all of that in this video, but more importantly, I'm sharing these as examples. Please do not go and buy Coal India or Hindustan Zinc Limited. These are very good examples for us to look at what has happened in the past with these examples. And it also motivates us to think about building dividend stocks in our portfolio if you really are looking at passive income or regular income coming from stock market. Here, the price movement of a stock does not really matter a lot. What really matters is, can you continue to build some regular income, some passive income coming your way while just buy and sit and hold the stocks for long period of time. So in this video, I'm going to speak about how to go about picking quality dividend stocks using very simple methodology. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. With that, let's get this video cracking. So the first thing we are going to do is we are going to go to Screener, a free website that you can use. And if you can do it along with me, that will be very, very good learning for you live. So what you can do is pause this video, get your laptop or whatever and try typing it with me. But if you're watching this video on mobile, then you can do it later. Maybe subscribe to my channel and find this video later. So what we are doing on Screener is we are going to create a new screen. So create new screen here. And the first thing we are going to do is we are going to type, give me those companies that has got dividend yield greater than 3%. Now again, I'm going to explain you what dividend yield is. First, let's run this query and see how many companies we get. We get total 110 companies which has shown dividend yield greater than 3%. What is dividend yield? Let me now give you simple 30 seconds commentary with a live example. So for example, if you were to calculate the dividend yield of Hindustan Zinc Limited, it simply means that what is the total dividend that the company has paid in the last 12 months or in the last fiscal year divided by the current market price of that particular stock. So for example, here, if you look at the last fiscal year in 2024, the company made two dividends at 19 rupees, 10 rupees. So 29 rupees of total dividend divided by the current market price of Hindustan Zinc Limited at the time of recording this video, 452 rupees per share. So 29 rupees divided by 452, you get the dividend yield as 6.41%. Now the most important point you need to note here is the price is what drives how much of dividend yield you are going to get. Just imagine an investor that is buying this stock at 452 versus another investor that is buying at 200 rupees per share. The dividend yield for second investor, which is bought it at 200 rupees per share, is going to be very, very high. So whenever you're thinking in investing in dividend stocks, please make sure that you look at the price at which you're buying. It cannot be an all-time high price in my view, because your dividend yield really depends on the price at which you're buying it. Now coming back to our query here, if you come down here and need to filter it further out, because we need to find out of these 110 stocks or whatever number that we got, how many stocks have actually consistently delivered the dividend in past. We don't want to pick a stock that just gave one-off dividend last year and that's why the dividend yield is more than 3%. We want to make sure that the company has consistently delivered the dividend in the last few years. So for that, what we are going to do is we are going to say and then we're going to say dividend last year here should be greater than at least 1000 crore, because we are not interested in companies that are giving very, very small dividends, 200 crore, 100 crore, 10 crore. We are looking at big companies that have a good track record. That is one parameter here. But also we are not only looking at the last year's dividend. We also need to go back to previous year. So what we are going to do is add here dividend preceding year. So preceding year also needs to be 1000 crore or more. So if we run this query now, so out of the 110 companies we had, we now only have 16 companies, and these companies have given last year and preceding year more than 1000 crore of dividends, meaning that these companies have a consistent track record of paying dividend in the last couple of years. Now the next criteria we are going to use is we are going to only find out those companies that have made profits in the last 12 months, because if a company has made profit, then only it can give dividend, because a company that is making losses is not likely to give us dividend. Therefore, what we are going to do here is we are going to type another condition, that is and profit after tax. So let's type profit after tax should be greater than 0 here. So let's type it out and run this query again. Now we get 16 companies. So meaning all these companies are profitable. This is a check that we must do. Now you can go and do some individual research about these companies, but please make sure you also look at valuation. So how do we go about looking at the valuations? One very, very basic filter that you should put in here is that let's go and look at the PE ratio of the company. So what I'm going to say is that and the PE ratio of the company, which is the price to earning ratio, should be less than the industry PE. At least valuation should be lower than the industry PE. Now let's run this query and see how many companies we get. Now we get 14 companies, and all these 14 companies right now are trading at a PE which is less than the industry PE. Again, I do not know when you're running this query, but the idea here is that you can use this query anytime you want to go and review good dividend paying stocks. Now comes my last criteria, which is the price. Again, I've talked about price in the dividend yield, that if you buy a stock which is at very, very low price, that's where your dividend yield is very, very high. So what we are going to do is we are going to look at only those companies here possibly for which the price has been down. So for this, what we are going to do is we are going to add another condition here, that percentage down from 52-week high, meaning that the 52-week high price, if we take, it should be down at least 20%. So if I say 20% here, again, this 20% could be anything, whatever you like. I like minimum 20%. So the stock price right now should be at least 20% down from its 52-week high. So what we're going to do is run this query here, and now we are going to get much shorter list. Let's say 11 companies in our example here. These companies in the past have paid good dividend. They have very, very good dividend track record. Their dividend yield is higher than 3%. Their PE ratio is less than industry PE at the time of doing this screener query. Also, they are profitable companies, so the chances of they paying dividend is slightly better than companies that are making losses. And finally, they are down from their 52-week by at least 20%. These are the criteria that you can use to get to a list. It doesn't mean that you blindly go and invest in these companies from a dividend perspective. There are 2 or 3 more checks you need to do, which I'm going to run you through now. So far, if you're liking this video, I request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. Also, if you practically want to learn investing, you can consider joining my YouTube community, because almost on daily basis, I post a lot of details about mutual funds, stocks, ETFs, and various other assets that will make you a better investor practically. And the feedback of this community has been excellent. Simply go to my channel, find the join button, and be my guest. With that, let's move to 2 crucial checks that you must do in any of these companies. Number 1 is we need to really ask, why would this company continue to give dividend in the future? I know that this company has given dividend in the past. That's all very good. But in the future, can this company continue to give the dividend or not? The answer lies in the dividend policy that every company generally has. So for example, REC Limited. Again, not a stock recommendation here. I'm going to pick an example so that I can show you some live data. So if you go to REC's website, you will find somewhere here dividend distribution policy. Every company should have a dividend distribution policy. You can go and read it. Now, when you come and read REC's dividend policy, you will note that company has a policy that they are going to pay minimum annual dividend of 30% of their profit after tax. Meaning, if the company makes 100 crores of profit after tax, out of that 100 crore, 30 crore is the dividend that they are going to give it to their investors. That is a very, very good number. It is very, very clear. It is not vague at all. 30% of PAT or 5% of the net worth, whichever is higher, subject to some maximum dividend permissible under the legal limits, etc. Also, in this policy, you will find some circumstances under which they may not pay dividend, because dividend is not a guaranteed instrument. Please understand that. It is very different from fixed deposit income that you get. Here, company may give or may not give, but typically PSUs, for example, they may continue to give dividend because of Indian government's policies. For example, here there is a minimum annual dividend of 30% of PAT or 5% of the net worth. Now, if you look at REC's profit growth, so for example, here, if you go back and check their P&L account, you will, for example, find that the company is continuously growing its profit. Last 3 years, profit growth has been around 19% CAGR, 5 years have been around 20%. So it means company is growing its profit, and as the profits grow, dividends are likely to grow. And we can see that in their dividend history as well. So for example, here you come back and look at the last 4 to 5 years, their dividend payout as percentage of their equity share capital has been continuously going up because the company has been making profit. Now, these are the points that you can go and check about any company. Again, please do not take REC as a recommendation here. What I've done is shown you the dividend policy of this company, and I've shown you what the conditions are and how you go about looking at those conditions. Look at the profit of the company and look at how this dividend has been paid out in the last 4 to 5 years as the company has been growing its profits. The second crucial check that you must do for yourself is, what is the future of the company that you want to invest in? Because, for example, you might say that you don't believe in IT sector, therefore you're not going to pick a company that is operating in IT sector. Or you might say that you want to take your dividend bet in a banking sector because banking is an evergreen sector, for example. So you need to really look at the sector that you want to play this dividend strategy with, and that is an individual call. You and me can be completely different, and we may have a different views in terms of where you want to take your dividend bets. Third and the last point I will make about dividends is that dividends are no overnight lottery system. Please understand this very, very crucial point. Many people make this mistake. They buy a dividend stock and then they are not very, very patient with that. If we can learn one thing from Warren Buffett, that needs to be dividend portfolio that he's built over decades. For example, right now, if you look at dividend portfolio that he has, he's got a lot of these companies that are paying more than 5%, 4%, 3% dividend yields. And this portfolio he's not built overnight. He's sat on it for decades. And that's why if you'll see, there is an estimate here that he's going to get $3 billion dividend income. Now, this is a crazy amount of dividend. It is not being built overnight. So if you're thinking about getting dividend stocks just for overnight, what I mean by overnight here is only for few months or 1 or 2 years, then maybe you need to rethink about your strategy, because dividend stocks are typically those stocks that you need to invest in, hold it for longer time. That's where the magic of dividends compound. This is precisely why I took up 2 examples in the beginning of this video and showed you last 4 years of dividend history for both the examples that I showed you. Please make sure you're not looking for overnight results when it comes to dividend stocks. In this video, I've talked a lot about dividend stocks. Now I'm going to give you homework here. Let me know in the comments what is the taxation on dividends. I really want to see whether you can go and find out what are the current taxes on dividend income. I would love to read your comments. With that, I hope you enjoyed this video. I will see you in my next video. Until then, keep rocking.